When we look at the drop in oil prices, it's kind of moderated today, but what specifically has pushed us down to 42.75? And does it even matter if there's so much negativity?
Yes, it definitely does. Look, we've seen, from a financial side, we've seen traders absolutely just give up the ghost on oil here. We've seen long positions go to the lowest level in 2017 over the last 2 weeks. I think we're going to see a continued bailout on those long positions going forward. Look, money flying out of the oil market means oil prices go down. That's really the reality to it. On the fundamental side, you know, we have this absolute death march of U.S. oil producers who continue to pump. Despite it being cash negative, everybody loses money at $40 oil. Everybody. Saudi Arabia, Nigeria, U.S. oil companies, everybody loses money. And still we see increase in the amount of production from most of the major oil companies here in the United States. And for those times when they can't drill a well, they put it into storage in a duct, you know, a drilled but uncompleted, which leaves a lot of excess inventory on the market for when oil does rise. So every time you see a push forward in oil, you'll see them come into hedge, and you'll see some of these ducts start to come into play. And that has put a, you know, for right now, it's put a real top on the oil market. And for at least right now, the negativity has caused oil to sink.
Dan,
and sink pretty strongly.
No question that shale has been a big shift in the oil market, but it seems like there's always somebody ready to come in. Now we have Libya, now we have Nigeria. There's always somebody on the fringes that's going to come in. So is it really all shale at this point?
Well, what it is that what's changed over the course, and where I think I've gotten it wrong in terms of this particular oil bust, is it's not been like 97. It's not been like 07. What hasn't happened and hasn't been this kind of wholesale reconstruction of the oil companies that we saw during those two previous busts. And in fact, a lot of these oil companies going bankrupt and out of business, these private companies, and they don't, and they haven't, at least until the money runs out, they won't. And for right now, yes, the swing barrels are all in the hands of the Americans right now, and that means that until some of these companies decide not to continue marching down the road, we're going to have at least a top on oil, and we're not going to see that kind of constructive move forward that I thought we were going to see by now.
Nevertheless, Jeff Curry was telling Alex Steele that it doesn't bother him right now. And when I think of oil, I also think of the seasonality at play here. I've got on the Bloomberg the seasonality chart of WTI. It's for the last 4 years, and certainly things have changed a lot in the last 4 years since oil prices collapsed. David Kotak, does seasonality even matter anymore? That whole idea of there will be increased demand before the summer driving season?
It matters for short-term trading. Dan and I were talking in the green room before we came on the set.
You guys talked in the green room?
We actually did.
There's a rule against that. Did you know that?
And it was actually a cogent conversation.
That's right. Yeah, and we talked about the demand is rising.
Right.
If you have a long-term rising trend demand, all this volatility is in both directions. You get shocks in both directions. And we have another thing in play. We've got a swing producer in the United States. We agree until the money runs out.
Right.
We got a swing producer in Saudi Arabia that's got an enemy on the other side of the Persian Gulf. And the most potent weapon the Saudis have is a low oil price, because that's how they shut down Iran or make it harder for Iran in a military way.